I never expected to receive a foreclosure notice on a house I owned outright. But there it was in my mailbox on a humid Tuesday morning in Jacksonville, Florida, printed on official bank letterhead with threatening red text across the top. My name is Derek Ingram, and I had been living in my modest 3-bedroom ranch in the Palmetto Springs subdivision for exactly 8 months. The neighborhood was one of those cookie-cutter developments built in the early 2000s, with identical houses painted in various shades of beige and tan, manicured lawns that the HOA inspected weekly, and rules about everything from mailbox colors to the acceptable height of your grass. I had bought the place cash after selling my tech startup to a larger company, finally able to afford a home without the burden of a mortgage hanging over my head for 30 years. The foreclosure notice made no sense. I walked back inside, my hands trembling slightly as I read through the legal jargon. According to the document, I was 4 months behind on mortgage payments totaling nearly $8,000, and the bank was preparing to initiate foreclosure proceedings if I didn't bring the account current within 30 days. The problem was simple. I didn't have a mortgage. I had paid the previous owner, an elderly man named Robert Chen, $345,000 in cash, handling the transaction through a reputable title company with all the proper documentation. I immediately called the bank listed on the notice, First Coastal Federal, and spent 45 minutes on hold listening to music versions of 80s pop songs, before finally reaching a human being named Stacy in their mortgage department. Mr. Ingram, according to our records, you have a conventional 30-year mortgage on the property at 4782 Magnolia Drive, Stacy said in a tone that suggested she had delivered this news countless times before. The loan was originated in 2006 for $420,000, and there's currently an outstanding balance of $362,000 remaining. That's impossible, I said, trying to keep my voice level. I purchased this property 8 months ago with cash. No mortgage, no loan, nothing. I have all the paperwork from the title company. There was a pause on the other end of the line, followed by the sound of typing. Sir, our records show continuous payment history on this loan since 2006, with the most recent payments being made up until 8 months ago. Since then, nothing. That's when it hit me. 8 months ago, right when I bought the property. Who was making those payments? I asked, more typing. I'm not at liberty to discuss other customers' financial information, but I can tell you the loan is in the name of Bethany Morrison and Richard Morrison, jointly. I thanked Stacy and hung up, my mind racing. I had never heard those names before. They weren't the people I bought the house from. I pulled out the thick folder containing all my closing documents and started reading through everything carefully. The deed was clear. Robert Chen had sold me the property, and the title search conducted by the title company had shown no liens or encumbrances. Yet somehow there was a mortgage on the property that predated my purchase. That afternoon, I drove to the title company, Premier Title Solutions, located in a nondescript office building off Bay Meadows Road. The receptionist, a young woman with bright purple highlights in her hair, looked concerned when I explained the situation, and quickly ushered me into the office of Margaret Yates, the senior title officer who had handled my closing. Margaret was in her late 50s, with reading glasses hanging from a chain around her neck, and the weary expression of someone who had seen every possible complication in real estate transactions. She listened to my story, then pulled up my file on her computer. "This is very unusual," she said after several minutes of reviewing documents. "We did a complete title search before your closing. There were no mortgages or liens showing on the property. Robert Chen owned it free and clear." But how is that possible if there's a mortgage from 2006? Margaret frowned, clicking through more screens. Let me check something. She picked up her phone and made a call to the county recorder's office. The conversation that followed involved a lot of technical jargon about document recording numbers and reference numbers, but the conclusion was clear. Something was very wrong. The mortgage that the bank is referencing was never properly recorded against your property, Margaret explained after hanging up. It was recorded against a different property, but somehow the bank's internal systems have it associated with your address. So what do I do? You'll need to get a lawyer involved. This is a clear title issue, and the bank needs to correct their error. In the meantime, I'll prepare a letter explaining what we found and confirming that our title search showed no encumbrances. I left Premier Title feeling slightly better but still anxious. A title error was one thing, but foreclosure proceedings were serious business. I couldn't just ignore the notices and hope they went away. That evening, I decided to take a walk around the neighborhood to clear my head. Palmetto Springs was quiet in the early evening, with kids riding bikes and a few neighbors watering their lawns. I had just turned onto Azalea Court when I heard a sharp voice behind me. "Excuse me, you there?" I turned to find a woman marching toward me with the determined stride of someone on a mission. She was probably in her late 40s, with blonde hair styled in that particular soccer mom cut that required speaking to managers on a regular basis. She wore pristine white capri pants and a coral-colored blouse that probably cost more than my monthly utility bill. I recognized her immediately. Bethany Morrison, the HOA president and self-appointed guardian of neighborhood property values. "I need to speak with you about your mailbox," Bethany said, stopping directly in front of me with her hands on her hips. My mailbox. I had barely interacted with Bethany since moving in, aside from a brief introduction at a neighborhood barbecue, where she had immediately handed me a 3-inch thick binder containing all the HOA rules and regulations. It's leaning approximately 7 degrees to the left. According to HOA bylaws, Section 12, subsection 4, all mailboxes must be maintained in an upright and perpendicular position. I'll need you to fix it by the end of the week, or you'll be subject to a $50 fine. I stared at her, wondering if she was serious. The foreclosure notice was still fresh in my mind, and here was the HOA president worried about my mailbox tilting slightly. "I'll take care of it," I said. "See that you do." Bethany's eyes narrowed as she looked me over. "You know, there have been some concerns among the board about your property." "What concerns?" "Your grass was a 1/4 inch too long last week. Your garbage cans were visible from the street on a non-collection day last month. And someone reported that you had a ladder leaning against your garage for 3 days, which violates the exterior storage restrictions." I took a deep breath, reminding myself that arguing with HOA busybodies was never productive. "I'll be more careful." "I should hope so. We work very hard to maintain property values in Palmetto Springs. Unlike some people, my husband Richard and I have a significant financial investment in this neighborhood." She paused and something flickered across her face. "Speaking of which, I noticed you had some official-looking mail today. Bank correspondence, perhaps?" The comment struck me as odd. How would she know what mail I received? "Just routine stuff," I said carefully. Bethany's smile was thin and didn't reach her eyes. "Of course. Well, good evening, Derek. Remember, mailbox fixed by Friday." She walked away and I stood there feeling unsettled. Something about the interaction bothered me beyond the usual HOA petness. Then it hit me. Bethany Morrison. That was one of the names on the mortgage that didn't exist on my property. The bank had said the loan was in the names of Bethany and Richard Morrison. I walked back to my house quickly, pulled out the foreclosure notice, and confirmed what I had heard on the phone earlier. Then I pulled up the HOA directory that Bethany had provided when I moved in. There it was, Bethany and Richard Morrison, living at 4826 Magnolia Drive. 4 houses down from mine. The next morning, I called the bank again and this time asked for a supervisor. After explaining the situation once more, I specifically mentioned that the people named on the mortgage lived 4 houses away from me. "Can you tell me what address the mortgage is supposed to be for?" I asked. The supervisor, a man named Gerald with a slow southern drawl, took a moment to pull up the account. "The mortgage is for 4782 Magnolia Drive. That's my address." "But Bethany and Richard Morrison live at 4826 Magnolia Drive. Could there have been a clerical error when the loan was originated? More typing." "Sir, I'm seeing that payments on this loan have been made consistently for nearly 19 years. If there was an error, it would have been caught long ago. But the payments stopped 8 months ago, right?" "That's correct." "That's exactly when I purchased my property with cash. Don't you find that suspicious?" Gerald seemed to consider this. "I'll make a note in the file and escalate this to our loan research department. But Mr. Ingram, I need to be clear. Until this is resolved, the foreclosure proceedings will continue. The loan is tied to your property in our system, and we have a legal obligation to pursue collection." I hung up feeling frustrated and called the lawyer that Margaret at the title company had recommended, a real estate attorney named Patricia Wu who had an office in downtown Jacksonville. Her receptionist scheduled me for an appointment the following Monday, which meant I had to spend the weekend worrying about losing a house I owned outright. That Saturday, I decided to do some investigation on my own. I drove to the Duval County Clerk's office and spent 3 hours going through property records. The documents confirmed what Margaret had told me. I had a clear title to my property with no mortgages or liens. The previous owner, Robert Chen, had purchased the property in 2018 from a couple named the Hendersons, who had bought it new from the developer in 2004. There was no record of anyone named Morrison ever owning my property. Then I looked up the property records for 4826 Magnolia Drive, the Morrisons' house. The trail was more complicated. Bethany and Richard Morrison had purchased the property in 2006 for $420,000, financing it with a conventional mortgage from First Coastal Federal. The loan amount matched exactly what the bank claimed was owed on my property. I sat back in the uncomfortable wooden chair, pieces starting to fall into place. The Morrisons had taken out a mortgage in 2006. Somehow, possibly through a clerical error, that mortgage had been recorded or referenced incorrectly in the bank system, associating it with my address instead of theirs. For 19 years, the Morrisons had been making payments on their mortgage without issue. Then, 8 months ago, the payments stopped right when I bought my house. But why would the payments stop? I pulled up the county records on my phone and checked the payment history more carefully. According to public records, there were no delinquent taxes on the Morrisons' property, and they still lived there. If they had stopped making their mortgage payments, the bank would be foreclosing on them, not me, unless they knew about the error. The thought sent a chill down my spine. What if the Morrisons had discovered that their mortgage was mistakenly associated with my property in the bank system? What if they had deliberately stopped making payments, knowing the bank would come after me instead of them? I needed more information. That evening, I did something I wasn't entirely proud of and searched for Bethany Morrison on social media. Her Facebook profile was semi-public, and what I found was illuminating. Over the past year, Bethany had posted numerous photos of expensive vacations. A 2-week cruise through the Mediterranean, a ski trip to Aspen, a long weekend at a luxury resort in the Bahamas. There were pictures of a brand new BMW in the driveway, tagged just 4 months ago. Designer handbags, expensive restaurants, box seats at Jaguars games. For someone supposedly making mortgage payments, Bethany was living very well. I took screenshots of everything and added them to the growing file I was building. Monday couldn't come fast enough. Patricia Wu's office was in a renovated historic building near the courthouse, with exposed brick walls and modern furniture that somehow managed to look both professional and welcoming. Patricia herself was in her early 40s, with dark hair pulled back in a neat bun and sharp eyes that missed nothing. I laid out everything I had discovered: the foreclosure notice, the title company's findings, the mortgage that belonged to the Morrisons but was somehow tied to my property, the suspicious timing of the stopped payments, and the evidence of the Morrisons' suddenly extravagant lifestyle. Patricia listened without interrupting, taking notes on a yellow legal pad. When I finished, she sat back and tapped her pen against her chin. "This is mortgage fraud," she said bluntly. "If what you're suggesting is true, and the Morrisons deliberately stopped making payments on a mortgage they know is mistakenly associated with your property, that's criminal fraud. They're essentially trying to steal a house by manipulating a clerical error. Can we prove it? We'll need to subpoena bank records and possibly phone records if they communicated with the bank about this error. But first, we need to stop the foreclosure. I'll file an emergency motion this week to halt proceedings and require the bank to conduct a full audit of the loan. We'll also file a quiet title action to confirm your ownership free of any encumbrances." "What about the Morrisons?" Patricia's expression hardened. "If we can prove they knew about this error and exploited it, I'll recommend you file a criminal complaint with the state attorney's office." This isn't just a civil matter. Over the next 2 weeks, things escalated quickly. Patricia filed the necessary motions, and the bank was forced to conduct an internal investigation. During this time, I received 2 more letters from First Coastal Federal, each more threatening than the last. I also received my first official fine from the HOA, $50 for failing to fix my mailbox quickly enough. I had actually fixed it 3 days after Bethany mentioned it, but she claimed it was still not perfectly perpendicular. Then came the HOA board meeting. I hadn't planned to attend, but I received a certified letter informing me that there would be a special discussion regarding my property and multiple violations. The meeting was held in the community clubhouse, a bland building with fluorescent lights and the faint smell of chlorine from the adjacent pool. About 20 residents were scattered around the room when I arrived, most of them looking bored or checking their phones. The HOA board sat at a folding table at the front. Bethany Morrison in the center as president, her husband Richard to her right, and 3 other board members I vaguely recognized from neighborhood events. Richard Morrison was a tall man with thinning hair and the soft physique of someone who spent most of his time behind a desk. He wore a polo shirt with a real estate company logo, and I remembered hearing he worked as an agent somewhere in town. Bethany called the meeting to order and worked through routine business: landscaping contracts, pool maintenance schedules, and a complaint about someone's dog barking. Then she got to what she clearly considered the main event. "We need to discuss the ongoing violations at 4782 Magnolia Drive," Bethany announced, looking directly at me with barely concealed satisfaction. "Mr. Ingram has repeatedly failed to maintain his property to community standards." I raised my hand. "I'd like to address that." "You'll have an opportunity to speak when I'm finished." Bethany shuffled through some papers. In the past 2 months, we've documented the following violations: mailbox positioning, grass height exceeding limits, garbage cans visible from the street, exterior storage, and most recently, an unauthorized door wreath. A door wreath? I couldn't help myself. The HOA guidelines specify that seasonal decorations are permitted only during the 30 days preceding and 7 days following the associated holiday. Your Christmas wreath remained on your door until January 15th, which is 22 days after Christmas. The absurdity of the accusation was almost funny. So you're fining me because my wreath was up too long. The rules exist for everyone, Mr. Ingram. We can't make exceptions. Bethany's smile was smug. The accumulated fines now total $350. Additionally, the board is considering placing a lien on your property if these violations continue. That's when I understood. She knew. Bethany knew about the mortgage error, knew about the foreclosure proceedings, and she was piling on HOA violations to create additional financial pressure. She was trying to force me out of my house through any means possible. "I'd like to say something," I announced, standing up. "Mr. Ingram, please wait until—" "No, I think everyone here should know what's really going on." I pulled out copies of the documents I had brought. I received a foreclosure notice last month on a house I purchased with cash. The mortgage that's supposedly in default doesn't belong to me. It belongs to Bethany and Richard Morrison. The room went quiet. Several residents who had been scrolling on their phones looked up with interest. Bethany's face flushed red. "That's absurd. Our mortgage has nothing to do with your property." "Really? Because First Coastal Federal has a mortgage for 4782 Magnolia Drive in your names. The same mortgage you took out in 2006 for $420,000. The same mortgage that, according to my attorney's investigation, has the same loan number as the mortgage on your actual house at 4826 Magnolia Drive." Richard Morrison stood up abruptly, his chair scraping against the linoleum floor. "This is completely inappropriate. This meeting is about HOA business, not personal financial matters. It becomes HOA business when the HOA president is using her position to harass someone while she's committing mortgage fraud." The murmuring in the room grew louder. Bethany was on her feet now too, her face twisted with anger. "How dare you accuse us of fraud? You're the one who's delinquent on your mortgage." "I don't have a mortgage," I said calmly. "But you do. And you stopped making payments 8 months ago when you realized the bank had your loan number confused with my address. You figured you could stop paying, let the bank foreclose on my house instead of yours, and nobody would notice." "That's defamatory," Bethany shouted. "Richard, call our lawyer right now." One of the other board members, a retired school teacher named Mrs. Patterson, spoke up. "Bethany, if there's any truth to these allegations, this is very serious." "There's no truth to any of it. This man is clearly unstable. He's probably in financial trouble and making up wild stories to avoid his responsibilities." I distributed copies of the documents to the residents nearby. "Here's my closing statement showing I paid cash for my house. Here's the title report showing no liens or mortgages. Here's the bank's foreclosure notice showing a mortgage in the Morrisons' names. And here's the county record showing the Morrisons' mortgage from 2006 for the exact same amount." People crowded around examining the papers. The mood in the room had shifted from bored disinterest to active engagement. Someone pulled out their phone and started taking pictures of the documents. Richard grabbed Bethany's arm. "We're leaving. This meeting is over." "The meeting isn't over until I say it's over," Mrs. Patterson said firmly. "Bethany, I think you need to step down as president until this matter is investigated." "I will do no such thing. This is my neighborhood. Richard and I have been pillars of this community for 20 years. 19 years, I corrected. You moved here in 2006, the same year you took out the mortgage you're no longer paying. The Morrisons stormed out of the meeting, but the damage was done. Within hours, the neighborhood Facebook group was buzzing with speculation. By the next morning, at least 5 residents had called or texted me asking for more details. Patricia Wu called me 2 days later with news. The bank completed their internal audit. You were right. There was a clerical error when the Morrisons' mortgage was originated in 2006. The loan was supposed to be recorded against 4826 Magnolia Drive, but someone transposed the numbers and entered it as 4782 in their system. For almost 20 years, the error went unnoticed because the Morrisons were making regular payments, and they knew about it. That's where it gets interesting. I subpoenaed the bank's customer service records. Bethany Morrison called First Coastal Federal 9 months ago, shortly before you purchased your house. The customer service representative's notes indicate she was calling to verify her mortgage information and was transferred to several departments. The last note says, customer became aware of address discrepancy in system. Advised we would investigate and correct, but the bank never followed up. So she knew. And according to the bank's records, the Morrisons haven't made a single payment since that phone call. They stopped paying immediately after learning the bank had their loan associated with the wrong address. That's mortgage fraud. It's mortgage fraud and theft by deception. I've prepared a complete report for the state attorney's office. I'm also recommending you file a civil suit against the Morrisons for intentional infliction of emotional distress and abuse of process for the HOA harassment. The state attorney's office moved faster than I expected. Within 3 weeks, investigators had interviewed me, Patricia, the bank officials, and several neighbors. They obtained phone records showing that Bethany had indeed called the bank 9 months earlier, and that she and Richard had subsequent conversations about stopping their mortgage payments. The investigators also discovered something else. Richard Morrison had been researching foreclosure laws and posting in online forums under a pseudonym, asking questions about what happens when a bank forecloses on the wrong property, and whether there was any legal liability for the actual mortgage holder in such situations. The posts were traced back to his IP address. On a warm morning in March, I was working from home when I heard sirens in the neighborhood. I looked out my window to see 2 police cars and an unmarked sedan pulling up in front of the Morrisons' house. 2 detectives and several uniformed officers got out and walked to the front door. I watched as Bethany answered, saw her face go pale, and observed as she and Richard were led out in handcuffs 20 minutes later. Several neighbors had come out of their houses to watch, phones in hand recording the whole thing. The arrests made the local news that evening. Jacksonville HOA president charged with mortgage fraud, read the headline. The story detailed how Bethany and Richard Morrison had allegedly stopped paying their mortgage after discovering a bank error, deliberately allowing the bank to pursue foreclosure against an innocent homeowner while they lived mortgage-free. The investigation revealed that over the 9 months they hadn't made payments, the Morrisons had saved nearly $18,000. That money had funded their extravagant vacations, the new BMW, and the designer shopping sprees Bethany had documented so thoroughly on social media. The bank, facing significant liability for their own errors, moved quickly to correct the situation. They formally acknowledged that my property had no mortgage or liens, issued a written apology, and offered a settlement payment for the stress and legal fees I had incurred. They also corrected their records to properly associate the Morrison mortgage with the Morrison property and initiated foreclosure proceedings against the correct address. The criminal case against the Morrisons moved through the system over the following months. Their attorney tried to argue that they had simply stopped making payments due to confusion about the bank error, but the prosecutors had too much evidence. The phone records, the online forum posts, Richard's internet search history about foreclosure laws, and most damningly, the fact that they had made no attempt to resolve the issue or inform anyone about the error after their initial call to the bank. In July, on a sweltering afternoon in the Duval County Courthouse, Bethany and Richard Morrison stood before a judge for sentencing. They had accepted a plea deal rather than go to trial. Bethany pleaded guilty to 1 count of mortgage fraud and 1 count of theft by deception. Richard pleaded guilty to conspiracy and theft by deception. I attended the sentencing hearing, sitting in the back of the courtroom with Patricia Wu beside me. The prosecutor, a sharp woman in her 30s named Amanda Torres, laid out the case methodically, emphasizing not just the financial crimes but the deliberate attempt to harm an innocent person. The defendants didn't just stop paying their mortgage, Amanda argued. They weaponized a bank error. They used Mrs. Morrison's position as HOA president to harass and intimidate Mr. Ingram, piling on frivolous fines and violations in an attempt to force him from his home. This was calculated, premeditated, and cruel. Bethany's attorney made a weak argument about her previously clean record and her contributions to the community, but the judge wasn't sympathetic. Judge Harold Martinez was an older man with gray hair and a reputation for harsh sentences in white-collar crime cases. Mrs. Morrison, Mr. Morrison, the judge said, looking over his glasses at the couple standing before him. You held positions of trust in your community. Mrs. Morrison, as HOA president, you were supposed to serve the interests of your neighbors, not exploit them. Instead, when you discovered a bank error, rather than working to correct it, you saw an opportunity for personal gain at someone else's expense. The judge sentenced Bethany to 18 months in federal prison, followed by 3 years of supervised probation. Richard received 12 months and 3 years of probation. They were also ordered to pay restitution to me for legal fees, the bank's losses, and punitive damages totaling over $100,000. Additionally, the bank's foreclosure on their actual property proceeded. The house at 4826 Magnolia Drive was sold at auction, and the Morrisons still owed a substantial balance on their mortgage that would follow them for years to come. In the aftermath of the criminal case, the HOA underwent significant changes. Mrs. Patterson was elected as the new president, and the board implemented new rules requiring board members to disclose any potential conflicts of interest and limiting the types of fines that could be imposed without homeowner input. The neighborhood actually became a more pleasant place to live. I settled into my life in Palmetto Springs, no longer worried about losing my home or receiving petty violation notices. The mailbox incident became something of a running joke among the neighbors. Someone even made T-shirts that said, "My mailbox is exactly perpendicular," and sold them at a neighborhood barbecue fundraiser. The civil suit I filed against the Morrisons was settled as part of their plea agreement. Between the restitution, the settlement from the bank, and the damages awarded, I recouped all my legal expenses and then some. More importantly, I had clear title to my property with no shadow of doubt. About 6 months after the sentencing, I was checking my mail when a car pulled into the Morrisons' old driveway. A young couple got out, looking excited as a real estate agent showed them around. The house had been purchased at auction by an investor who renovated it and put it back on the market. These new buyers looked happy, and I hoped they would be good neighbors. That evening I ran into Mrs. Patterson at the neighborhood pool. She was there with her grandkids, watching them splash around in the shallow end. "Beautiful evening," she said as I took a chair nearby. "It is," I agreed. "I wanted to apologize," she said after a moment. "We all should have recognized what Bethany was doing. The warning signs were there." "How could you have known?" The vindictiveness. The way she went after you so aggressively over minor things. "That wasn't normal HOA enforcement. That was personal. We should have questioned it." "You helped fix things once you knew," I pointed out. "That's what matters." Mrs. Patterson nodded. "You know, I served on the HOA board with Bethany for 8 years. I thought I knew her." "But I guess you never really know what someone is capable of until they're tested. Or until they see an opportunity they think they can get away with." "True enough." She paused, watching her grandchildren play. "I heard the bank made things right with you." "They did. And honestly, the legal settlement was generous. They wanted to avoid a lawsuit." "Good. You deserved compensation for what you went through." She looked at me seriously. "Bethany used to laugh, you know, after those foreclosure notices started arriving. She would mention it at board meetings, making jokes about the poor guy down the street who couldn't manage his finances. We all thought she was just being catty about a neighbor in trouble. The revelation didn't surprise me, but it still stung. Bethany had actively enjoyed my distress, had laughed at my predicament while knowing she was the cause of it. "She's paying for it now," Mrs. Patterson continued. "Federal prison, criminal record, bankruptcy, divorce." "Divorce?" Richard filed last month. Apparently, he's claiming the whole thing was Bethany's idea, and that she pressured him into going along with it. Trying to salvage what's left of his real estate career, I suppose. I felt a twinge of something. Not quite sympathy, but perhaps a recognition of how completely the Morrisons had destroyed their own lives. Bethany's obsession with status and appearances, her need to have the nicest things and the most enviable lifestyle, had led her to make a catastrophic decision. Instead of simply correcting a bank error, she had tried to exploit it and ended up losing everything. Over the following year, life in Palmetto Springs returned to a pleasant rhythm. The new neighbors who bought the Morrisons' old house were lovely. A young couple named Jennifer and Michael with a toddler and a friendly golden retriever. They threw a housewarming party and invited the whole street, and it felt like the neighborhood was finally healing from the drama. I continued to work from home, building a new software project with some former colleagues. The house that had almost been taken from me became a genuine home, filled with furniture I picked out myself, hosting dinners with friends, and providing the stability I had craved when I left the chaotic world of tech startups. Sometimes, late at night, I would think about how close I had come to losing it all. If I hadn't been diligent about checking my mail, if I hadn't immediately called the bank, if I hadn't hired Patricia Wu and fought back, the foreclosure might have gone through. The legal system assumes that banks don't make mistakes about which property holds which mortgage, and proving otherwise required substantial time and money. I thought about people who might not have had the resources to fight, who might have lost homes they owned outright because of clerical errors and the malicious actions of others. The injustice of it bothered me enough that I started volunteering with a legal aid organization, helping people navigate property disputes and foreclosure issues. The Morrisons served their sentences at different facilities. Bethany ended up at a federal prison camp in Alabama, while Richard went to a facility in Georgia. I heard through the neighborhood grapevine that Bethany maintained her innocence throughout her incarceration, insisting that she had been confused about the bank error and hadn't meant to do anything wrong. Richard, on the other hand, apparently became a model prisoner, taking classes and working in the prison library. When they were released, neither returned to Jacksonville. Bethany moved to somewhere in the Midwest to live with a sister. Richard apparently went to Atlanta, though his real estate license had been permanently revoked. The restitution they owed me would take years to pay off, garnished from whatever jobs they managed to find with criminal records. On the 2-year anniversary of receiving that first foreclosure notice, I decided to have a party. Not a celebration of someone else's downfall, but a celebration of home, community, and the importance of standing up for yourself when institutions and individuals try to take advantage. I invited the whole neighborhood, and to my surprise, most people came. We set up tables in my backyard, grilled burgers and hot dogs, and the kids played in the yard while the adults talked and laughed. Mrs. Patterson gave a short speech thanking everyone for pulling together during a difficult time, and several people raised their glasses in a toast. To Derek, someone called out. The man who proved you can fight City Hall and win. It wasn't City Hall, I corrected with a laugh. It was worse. It was an HOA. The joke got a big laugh, and the party continued into the evening. As I looked around at my neighbors, people who had started as strangers but had become genuine friends, I felt grateful. Not for the ordeal I had gone through, but for what came out of it. A stronger community, important reforms, and the satisfaction of knowing that justice, however delayed and imperfect, had been served. The mailbox that had started so much trouble stood straight and perpendicular at the end of my driveway, and my house, mortgage-free and fully mine, glowed with lights from the party inside. The bank notices were long gone, shredded and recycled. Bethany's laughter at my supposed financial troubles had been replaced with the genuine laughter of friends and neighbors who understood what really mattered. In the end, the story became a cautionary tale in our subdivision and beyond. Local news outlets did follow-up pieces about HOA abuses and the importance of title insurance. The title company used my case as a training example for their staff about the critical importance of thorough property searches. First Coastal Federal implemented new system checks to prevent address errors in their mortgage database. But for me, the most important outcome was simpler. I was home, truly and completely home, in a place I had earned and defended, surrounded by people who had learned the same lesson I had. Sometimes the biggest battles we face come from the most unexpected places, from the people who should be neighbors and allies, but instead become adversaries. And sometimes, when you stand your ground and refuse to be intimidated, you not only protect yourself but make things better for everyone around you. The following spring, Mrs. Patterson called a community meeting to discuss potential changes to the HOA bylaws. The turnout was impressive, with nearly every household sending a representative. The proposed changes included limits on fine amounts, mandatory appeals processes, term limits for board members, and most importantly, a requirement that any fine over $100 required approval from the full board, not just the president. These reforms are named the Ingram Amendments, Mrs. Patterson announced with a smile in my direction, because we should never again have a situation where one person can abuse their position to harass a homeowner. The amendments passed unanimously, and I felt a sense of closure. What had started as a nightmare scenario, receiving foreclosure notices on a home I owned outright while an HOA Karen literally laughed at my misfortune, had transformed into positive change. The Morrisons had paid dearly for their fraud, losing their home, their freedom, their marriage, and their standing in the community. Meanwhile, I still stood in mine, surrounded by neighbors who had become friends, protected by laws and bylaws that were stronger because of what we had all been through. I never forgot the feeling of opening that first foreclosure notice, the confusion and fear that came with it. But I also never forgot the strength I found in fighting back, the importance of thorough documentation, and the value of good legal counsel. Patricia Wu became not just my attorney but a friend, someone I trusted implicitly and referred anyone I met who faced property disputes. Years later, when I finally decided to sell the house and move to a different city for a new business opportunity, the sale went smoothly. The title was crystal clear, the property had appreciated significantly, and the buyers were a family who loved the neighborhood and the community spirit that had developed there. At my going-away party, someone joked that I should take my perfectly perpendicular mailbox with me as a souvenir. I laughed and declined, but I did take photos, dozens of them, documenting every corner of the house that had meant so much, that I had fought so hard to keep. The woman who had laughed at my bank notices was still serving probation somewhere, still making restitution payments, still dealing with the consequences of her fraud. Meanwhile, I was moving forward with my life, taking the lessons I had learned about perseverance, justice, and the importance of community with me wherever I went. The final irony was not lost on me. Bethany Morrison had spent nearly 20 years making mortgage payments on her house, only to throw it all away for 9 months of payment-free living. She had sacrificed everything for a short-term gain, for luxury vacations and expensive cars, and the appearance of wealth. In the process, she had lost the real wealth she possessed, a home she had built equity in for almost 2 decades, a position of respect in her community, and a future free from criminal records and bankruptcy. I, on the other hand, had paid cash for my home, owned it outright from day one, and when threatened with its loss, had fought with every resource I had to protect it. The contrast was stark: patient saving and legitimate wealth versus leveraged appearances and fraudulent schemes. In the end, substance had triumphed over style, honesty over deception, and justice over abuse of power. As I drove away from Palmetto Springs for the last time, I glanced in my rearview mirror at the neighborhood that had been the site of so much drama, stress, and ultimately growth. The houses looked peaceful in the morning sun, mailboxes standing straight, lawns maintained to exactly the right height, a community that had learned important lessons about governance, fairness, and the dangers of unchecked authority. And somewhere in a database at First Coastal Federal Bank, my property existed with a note attached to its history. Subject of mortgage fraud case 2024-2025. All liens cleared. Title confirmed clean. A digital footnote to a very real human story about greed, justice, and the importance of fighting for what is rightfully yours, no matter who tries to take it away.